Welcome to Real Estate Talk. We're tackling your questions about real estate. Courtney, we got like a twofer here.
Okay.
Today's questions plural, are what are mortgage points? And should I buy down my interest rate?
Okay, I want to take the mortgage points and I'm going to leave the math up to you, Joe. How about that?
All right, that sounds good.
Okay, so what are mortgage points? They are fees a home buyer pays directly to the lender in exchange for a reduced interest rate. When you pay it up front, we call it paying points or buying down the rate. And everybody is super rate conscious right now. What is my interest rate? How can I get the best rate? So, Joe, you want to talk a little bit about how it works?
Yeah, it's math time, and it's really not my strong suit, but I'm happy to tackle it. So let's say, again, we always go back to the example of a $200,000 mortgage, just as a starting point, and the lender offers a 30-year fixed rate at, say, 6.5%. So that's actually pretty close to what rates are now, I think. So you might have the option to buy points at a cost of 1% of the loan amount each. So you could buy 2 points for $4,000, 1% times 2 times 200,000. So this would reduce your interest rate often by 0.25% per point. So in this scenario that we just laid out, your interest rate would be reduced from 6.5% that we started with to 6%.
You know, as you were speaking, Joe, I was thinking about how we combined rate buy down with what we're seeing in the real estate market right now. And with an increase in inventory, we are seeing in some areas sellers offer some sort of incentive to buyers, whether that be buyer agent compensation, buyer concessions to use towards closing costs. In some cases, there are sellers and builders that are offering money to buy down the rate. So keep this in your back pocket, guys, because it could be really valuable in your negotiations for the home. So I just wanted to add that.
It's a great point. It's sales, right? So you're trying to meet the buyer where they're at. There are all the headlines around interest rates being higher, at least than they were a few years ago. And so you're trying to say, what will entice this buyer? And of course, if you're going to contribute money to something, buying down a rate could be really appealing to buyers right now.
Exactly. So the buyer has the ability to buy down the rate or negotiate and ask the seller to help them buy down the rate. So I do want to make that really clear. Let's talk a little bit about when it's a good idea to buy down the rate. And I'll start just kind of in my experience. If you plan to stay in your home for an extended period of time, maybe this is your forever home, buy that rate down, secure it once and for all, spend a little bit of money up front, but it's going to end up saving you a lot of money over time. What do you think about when is the best time?
Yours was the one I thought of first, but then I also thought about unfavorable market conditions because I just touched on that before, where if you're reading about what's going on in the news with really high interest rates at a given moment in time, not saying we're there right now necessarily, but if you've sort of been watching it and now you notice this really feels like doing it at the top, where you could consider buying it when rates are relatively high compared to the historical trends that you've been keeping your eye on. So if it's if you've been seeing it pretty high and then it raises even further, it might be a good time to buy it down.
Yeah, and I think the and I say this with love, the excuse of I'm not going to buy a house because the interest rate is too high. Well, this kind of mitigates that, right? Maybe the interest rate is a little bit higher than you want to be, but now we can negotiate a buy down for sure. Another circumstance that I think about if I'm deciding whether or not I should buy a rate down is kind of looking at my credit score, looking at my overall financial stability. That actually might be something that if I have the cash or I'm able to negotiate it, it's going to be a win-win. It's going to save me money as well. So kind of looking at the price point of the home, looking at how much cash I will have to bring to the table, and the monthly mortgage payment, that might be, with all of those factors considered, a good time to just, let me buy it down.
Yeah, I think as you get closer to actually closing on the sale, if you had, going into this whole process, an idea of what a monthly payment could be, trying to use a buy down to accomplish that once you're getting closer, because probably this has been a moving target, it could be a really good option for you. And one of the things you said was if you have the cash available.
Yeah.
And I actually feel like that sort of underlines the whole thing, where even if it
Yeah.
is coming from another source, if you've already budgeted everything accordingly, maybe this is something you did not plan on doing. But if you do have, for some reason, that extra liquidity, it's a great option. I know, like, Courtney, just thinking about, when we bought homes maybe in the past or helped people, it's like, it's weird to ask this question like 5 or 6 years down the road, where it's like, well, you do have that hindsight. Be like, I'm really glad I did that because here's what happened with rates. But I feel like you don't see a lot of buyer's remorse on this sort of thing, where if you were able to do it at the time, you're probably pretty happy that you bought it down.
Absolutely. But Joe, there's a big but here.
Okay.
Because the term of the buy down does impact what you're going to say in the future. So for example, let's say you do a 2-1 buy down, and that means you're buying down the rate for just a short period of time, not the life of the loan.
Yeah.
That rate may end up going up, and it may go to a rate that you're not comfortable with. So you really have to talk to your lender about what are the terms of the buy down. Is it to buy it down completely for the life of the loan, or is it just for the first few years?
Yeah, it's a really good point. I think like what you're saying too is it's also just about the initial cost of everything versus the future benefits, where if the future benefits are jeopardized in your scenario, you need to know that up front. So the terms really do matter.
Yeah.
And of course, like we say this all the time, but that's why you need a trusted lender. You might even need an agent to first introduce you to that trusted lender if you don't know one already, or a financial advisor to figure out the right solution for you.
So Joe, is it worth it? Buying down your rate, is it worth it?
You know how I am too. It's like I always hate these conditionals where it's like, well, maybe, but it really is true. But I think like if I'm going to boil it down to one thing, it's actually one of the earliest things that you touched on, which was the longevity or like how you picture yourself in the home. Meaning, if you think you're going to be in the home for a long time, that's like point number one to me, where I'm really considering trying to do this, because there's not as much of a turnaround there where you're actually refinancing again. If you don't think you're going to refinance down the line, it's like, I found my home. I know I'm going to be in it for at least 5, 10, 15 years. I'm feeling much better about a buy down. So that's really what it boils down to for me.
Yeah. And you know me, and I say this, I've said this in context of different videos that we've had over the past few months, is I like to look at it from a holistic perspective. So I'm looking at it in terms of, okay, what are my upfront costs? How much does it save me over how long of a period of time? And then I look at, okay, where do I see myself financially over the next 5, 10 years? And then once I have all of those details, then I can say, okay, yeah, this is worth it. Or no, I'm going to just stay put and then consider refinancing later if the rate ends up going down. That's also an option.
Yeah. I mean, you're dealt this hand, right? And so you try to play it to the best of your ability, but who knows with different things that can happen down the line, whether or not you look back and say, yeah, that was the right call. So what I'm saying is, maybe in my own circumstance, it's like, don't beat yourself up too much about if you spent the money early on or you didn't spend the money.
Absolutely.
We all have stories about how we could have bought into the market at much lower prices too.
Of course.
So it's really trying to guess the future a little bit here.
Definitely, definitely. Well, guys, I hope this is helpful if you are considering buying down your mortgage rate. We'll provide more information in the description below, and we'll be back very soon with another episode with tips to help you navigate the world of real estate. Let us know in the comments what additional questions you may have, and we will see you next time.